Hello to everybody, our dear subscribers. FutureTrend channel is glad to welcome all of you, and today is 8th of May 2019. We are ready to present our point of view of our vision of how to trade major currencies in the world financial markets. As regarding today, of course, the topic number one to discuss among the traders is the future relations on the trading basis between the two economic superpowers in the world, United States and China. At the moment the situation is a little bit tricky. United States are ready to impose new tariffs on China imports, the tariffs of 25% on the total turnover of $200 billion. And more, they are ready to impose increased tariffs to remaining part of the turnover between the countries. And that means, of course, that this situation does not bode well for their appetite for risky assets. And as you could see at the moment, for example, the dollar yen is really feels itself really very weak. That means that the dollar is lower, and the Japanese yen as a safe haven currency is on the rising path. At the moment, if we look on the longer term kind of charts, first of all, we are below the uptrend line that was drawn, as you could see, that was drawn from the lows of January through the lows of March. We finally broke this uptrend a couple of days ago. Another important reason is that we are below 200 moving average line, which is far from here, by the way, at the moment around 111.49. Of course, there is a strong support barrier in the form of the lows of March around 109.70, and of course the Japanese yen should break below this line to extend its current losses. That's our preferable scenario. We suggest that it's time for the Japanese currency to strengthen. We suggest that all these tricks from the part of the United States administration, President administration, as well as United States President Donald Trump, does not bode well not only for the world economy but especially for the United States economy. Of course, the China economy will also suffer in such kind of circumstances. Anyway, we suggest that probably it's time of a risk aversion to deepen further, and that will mean that the Japanese yen will be the main beneficiary, not only against the United States dollar, but also against some other currencies. And for example, you also seeing the euro yen is on its lower side of its existing range. As regarding a longer term kind of chart, you could see that we are both below two trend lines, downtrend lines. We are below a moving average 200 daily line located today at 127.17, and we are ready to to extend current losses. It's hard to say probably that we will be back to the lows of January. You remember this flash crash, and at the beginning of this year, to the lows in this kind of liquidity provider, to the lows of 119.06. Anyway, why not? So we should be ready for another move of the Japanese yen further to the upside, and that means that we should be ready for that. As you could see, we close our position, existing short position accumulated in the dollar yen at 112. We closed it today at the pivotal, not kind of pivotal, but at the support level at 110. But anyway, we will use an opportunity of another setback high to 110.95 to sell again the pair. Also, the same applies for the euro yen. Another interesting story to discuss is not the kind of the euro dollar, by the way. We are entering a long position here, and we don't suggest that yesterday's European Union economic forecasts were especially bad. Of course, they lowered the gross domestic product forecast for 2019 further to the downside. Now it's around 1.2%. Anyway, for 2020, the situation is quite different, because the European Union Commission suggests that sooner or later unemployment rate will fall, gross domestic product will rise, probably inflation will be subdued, but anyway, not everything is so bad at the moment for the European economy. As you could see from the purchasing managers indexes that were published during previous trading week, they pointed probably to the pickup in the economic activity in the eurozone. That means that probably at the second half of 2019 we could see a rebound in the eurozone economy, and probably that's why we still suggest that the downside potential of the euro dollar is looking quite limited at the moment. Of course, there are a lot of strong resistances at the moment in the euro dollar to the upside. Probably the most important one is the moving average 200 daily line at 114.05, together with the important better 114, because you know that every time above 114 a euro dollar finds a kind of stronger offers. Probably the same will apply for the next couple of weeks, who knows. But anyway, we suggest that now euro dollar is at the lower side, and probably it's time to accumulate some longer term, a long position in the currency on any kind of downtick to below the level of 112, with the stops, by the way, below existing lows of 111.10. Finally, we'd like to attract your attention. We'd like to point out another interesting situation with the Swiss currency. There are a lot of talkings why the Swiss franc is looking so easy at the moment. And there are a lot of talkings that, okay, now, for example, the situation with the Brexit is not so dangerous like, for example, a month ago. Another one is that political situation in the eurozone is not so tense as before. I mean, this blah 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 with Italian policy or Spanish policy, elections, votes, and so on. Please don't make me laugh, friends. Look at the Swiss foreign currency reserves that were published yesterday. There is just one driving force at the moment, driving force of lower Swiss franc, and that's the SNB. The Swiss National Bank, as you could see, they started to accumulate, to increase the portion of its foreign exchange reserves, and that's because of a constant buying of different types of Swiss crosses in the foreign exchange markets. Especially these interesting if we look at the, for example, at the Euro Swiss. You know that Euro Swiss was at the end of March around 111.60, and of course all kind of instruments to improve inflation expectations in the country, to improve its export-oriented industry, to improve economic strength. All these instruments now probably were used by the SNB, but without success. But and this kind of circumstances, there is one, as SNB suggests, important and efficient kind of instrument, and that's intervention in the foreign exchange market to weaken the Swiss currency. And that's, of course, it will be quite important for the export industry as well as for the inflation expectations, because lowering your national currency, you will improve inflation expectations, and you will try for the inflation for the consumer price index to tick up further to the upside. That means that there is, as we suggest, there is one driving force of the Swiss crosses at the moment, and that's S&P, not a Brexit or something else, because the situation is not so dramatic at the moment for the Swiss economy, and that does not mean that the Swiss franc should collapse. Anyway, we see that the S&P is really very interested in the lower price of its national currency. Anyway, we suggest that as regarding the dollar Swiss as well as Euro Swiss, there is important kind of resistance around the level of 115. Let's see the daily chart. Only in case of breaking above 115, but of course it could be if the S&P will decide to do so. Only in that case, probably the Euro Swiss will further improve its bullish perspectives. Of course, any kind of downticks to the level of 113.50 should present a buying opportunity for you, also because there lies a moving average 200 daily line at 113.41 from a technical point of view. As regarding the dollar Swiss, you also look how intense, how active was S&P in the foreign exchange market starting from 20th of March, buying also probably the dollar Swiss, because the dollar Swiss moved from the level of 0.99 to the level of recent highs around 102.36. Anyway, while below this level of 102.40, we suggest that probably we could see a kind of major setback in the price of the dollar Swiss. That's why, by the way, in the dollar Swiss we added to existing position, short position in the currency at 102.10, bringing the average to around, let's say, 75.85. It's around 0.0130, 60.70, and now we suggest that you could use a move to the parity level to close your positions. But of course, what should happen to really turn the dollar Swiss to the lower side? First of all, the dollar should collapse. The Swiss franc as a safe haven in case of a dramatic escalation in the trading relations between the United States and China. In case of these dramatic escalations of the conflict, also the Swiss franc should strengthen. And what else? And probably the Swiss National Bank should end its operation in the foreign exchange markets where it's selling the national currency. Thank you. Thank you for those of you who are looking for any kind of opportunities in the Euro crosses. We have just one position, and it's a long position in the Euro sterling. And for those of you who are looking for analysis of commodity currencies. By the way, first of all, we bought an Aussie, and we'd like to pay your attention. Let's see, by the way, the situation with the New Zealand dollar. New Zealand dollar was around the 0.6525 because the Royal Bank of New Zealand cut its benchmark interest rate from the level of I don't remember. Anyway, they cut the rates by 0.25%. Anyway, the majority of the market also already expected such kind of move, and we suggest that starting from now, the situation is not so bad. Even also for the Kiwi dollar, we suggest that probably it was a kind of mistaken decision to lower its interest rate, because as we suggest, and probably the Australian bank is much clever than its neighboring authorities, the banking authorities from New Zealand, we suggest that the situation is not so dramatic for these types of economies like New Zealand and Australian economies, and starting from now the situation will improve. Of course, it's hard to analyze this kind of decision, but we suggest that now the potential of the Kiwi dollar further to the downside is also quite limited, and that's why we will use move back to the lows of 65.25 to enter a new long position with the stop below 0.65. At the moment, that's all. We wish you a pleasant and profitable day ahead. Take care and bye bye for now.